Hello, everyone. Welcome to another episode of Firm Returns Weekly. This week, we have a few points to discuss on tinyBuild, Ecora Resources, Aviva, and Warner Brothers Discovery. And I'm using a new microphone arm, so hopefully the sound will be a bit better. I noticed last week that it had been picking up the banging sound of my neighbor doing some work in their garden. So I think hopefully with me being close to the mic, it'll now just focus on me rather than any background noise, but it's pretty quiet out there today anyway. Anyway, let's get started. So I'll just share my screen. Okay. So yeah, we're expecting tinyBuild's interim results at some point soon. So yeah, we'll have plenty to discuss then, I think, as it should be a good marker in how they're doing. Well, how bad things are, how bad the hit has been in terms of revenue, adjusted EBITDA, and so on, and net profit relative to what they were guiding at the AGM. Hopefully, well, but things might have been a little bit better than feared, but we'll find out. I don't want to be speculating too much. I know part of the issue is I think that we have had a couple of very successful releases, but I think they would probably come into the second half of the year. So they won't really be making any impact on the interim results for the first half. So yeah, there is that to consider. But so yeah, we could potentially have a better second half. I think a lot of it will come down to whether in the first half they've still had some. They took the really big hit to platform revenues that they were saying they were going to. As I mentioned in a prior week, Pigeon Simulator is an example of a game that seems to still be going onto Xbox Game Pass. So it could be that perhaps it's not as bad as feared, or maybe that was a pre-existing deal or whatever. Anyway, we'll find out. We'll get some more color on that in the coming weeks, and hopefully there'll be a webcast on Investor Meet Company, as there has been in the past. Well, we'll get an opportunity to hear from management directly and pitch questions and so on if we have any. But yeah, in the meantime, I just wanted to share a couple of articles that I was reading this week related to games industry, and yeah, and I think they'd be potentially quite useful to anybody that wants to try and go through the act of calculating a game's potential success, or if it's already been released, how successful it has been, potential sales figures and so on. From a game, anybody that's wanting to do that kind of calculation, this is potentially some good. There's some good information in these articles about how to sort of convert from some of the publicly available data, like follower numbers and things like that you can get access to from SteamDB, and reviews and what have you, how you can go from those to non-public figures like wish lists, and then how wish lists convert. The wish list is something that developers can see, obviously, that the publishers can see, but then how those wish lists convert on average to actual sales. And I thought it'd be interesting. I've actually got a couple of so I'll just show you the first of these articles. This was largely talking about follower, or the wish list to follower ratio. So how many times the follower count is the wish list, and it's normally quite a bit more. So you can see the average here. I think, I can't remember they give the exact figure, but I think they do at some point. Right, the average is around about is 9.64, or median of 9.6. So the first average being the mean, I guess. So yeah, it's around about 10 times. So then I just thought it'd be interesting with that figure in mind, looking at this wish list to follower ratio here, where in this curve tinyBuild sits. And obviously it's better if they can sit more towards this end. But yeah, so let's just have a quick look. I was just going to have a look at Punch Club. So we've got a couple. I wanted to have a look at Punch Club 2 and I Am Future, because those are the two games where we actually know what their wishlist counts were at launch. So if we look back here at the follower graph, we can see that at release, they were around about just over 6,000, 6,329, I think it says. Excuse me. And we know that it was, I think, just shy of 100,000. So that's going to be not far off a 20x, away towards the far left end of that graph. Let's just have a quick look. My old-fashioned Casio calculator. I think this is probably still the one I had from back in high school. So still going with the original battery after, I don't know, 15 years or so. So let's just go. Yeah, it's around about 15, 16 times. So that's going to be, yeah, right up here on the right at the left end of the graph here. I don't know what percentile that's going to be, but it looks like, I would say that's certainly the top 20%, maybe even the top 10%, which is, yeah, really positive. And then if we have a look at I Am Future, which had quite a few more followers at launch, 8th of August, give me 8th, yeah. So this had 12,987, but we know that it was 160,000 wish lists at launch. So as the company has disclosed, so this one is 12.32. So you can see, yeah, both games have been quite healthily above the average. And I mean, this was potentially in the top 25% or something, just from a rough guess here, if this is around about the average. Maybe top 25%. And then yeah. And then the other one, Punch, well, I don't know, this isn't actually like a frequency graph or anything. So well, yeah, this isn't really a frequency graph, though I suppose each one of these probably represents a game that they checked. So you probably can roughly bunch them together. But yeah, anyway, in both cases, significantly above average, which is just I thought was quite interesting. And then the just a little thing to mention on the wishlist stuff. Now, this is a much bigger article. It goes into loads of information. There's bits from various different developers, like 11 or publishers, 11-bit studios, talking about various things, timing of release. It was quite interesting. How this one's entitled, yeah, Steam, a game developer's guide to Steam wish lists. So they speak to quite a few different developers, and they also speak to Valve, which is the company that owns Steam. So yeah, and it's talking about just the advantages of having, if you've got more wish lists, they show your game in better places, all sorts of good things like that. You get onto different lists, it gets recommended to people more. So yeah, Steam does definitely use wish lists as a good yeah, metric for actually promoting games and so on. So it's definitely a good objective for publishers to try and developers to try and get their game higher up the wish list rankings and to just give it, get more wish lists. Yeah, and there's some interesting things like here's one, yeah, Rockfish Games Everspace 2, and you can just see some example data, which I think we've had similar data like this. We got given similar data like this for Punch Club 2. from Alex in his article, but you can just see the daily wish list ads here in this kind of turquoise color. Yeah, and timing with different events, and I think they were saying some good stuff about pretty much any kind of notification would give them a bump, even if it was that the game's going to be delayed a bit. That was quite interesting to hear. So yeah, just having a steady pipeline of announcements is a good steady cadence of announcements is definitely desirable. Yeah, and it was interesting just to get some insights to some particular games as well, like some really quite successful games like Frostpunk from 11-bit Studios. It was good to get a few insights from that. Yeah, and then they gave this graph was from Valve. I was talking about the average conversion of wish list ads within a year. So if you have 100,000 added within a year, or added then within a year of them being added, 19,000 will have been converted on average. And it's quite interesting because I think this varies quite a bit between games, and they were talking about this quite a bit in some of this particular case studies with certain developers and publishers talking. There was some of them were saying it's the case in their first week they'll convert as much as half of their wish list, or we're talking about thirds. And so I think this is probably just this 12 months figure from Valve is more just over the lifespan of a game, which that sort of averages out. But there's probably a bit more of a spike in the early sales. So you can look at you could use things like the data we know about IM Future and things like that. I think that's probably the cleaner one because it was early, but there's lots of different factors because that was early access, and I think it's clouded because of if a publisher does give you some information about a game, they're probably going to give you all the sales data. They normally will be including all the console releases and so on as well, which means that you're not really got perfectly clean data for the Steam stuff. So I don't know, you might be able to find some exact conversion rate examples, but yeah, just to know 19% is a pretty good set. That's kind of like you roughly could say if you've got now this many sitting on your wish list, 19% of those are going to get converted within the next 12 months. But yeah, and I think tinyBuild has done better than that with the two case studies that we've had, like the Punch Club 2 and IM Future. We have the data for. So yeah, moving on. So Ecora Resources released their interim results this week, and on the whole, they're in line with their previous guidance. And I've got a few highlights I've taken out here. So the total portfolio contribution was down to $44.5 million from $92.8 million the prior year. And bearing in mind the prior year had some pretty exceptional prices and volumes. I think it was like their peak year in terms of volumes from Kestrel, which is their metallurgical coal mining royalty, and all the royalty changes, allowing them they had captured a much higher percentage of the overall revenue than they would have done previously before there were some regulatory changes in the royalty regimes in Australia. Which obviously was done for the government to capture effectively more tax or to get royalty payments from the royalties that the government owned, but it also benefited private holders of substratum land royalties, as Ecora Resources had. But yeah, so that was a lot of it. But there also was this the more worrying one, I would say, was there. So that Kestrel stuff was largely expected, and I think they're not going to really expect much at all from in H2, and then coming back again in H1, just because as the mining operations move in and out of their royalty area. So that's kind of like just proceeding as expected. And it actually, the revaluation of Kestrel downwards as rates have come down and volumes have come down and everything, has actually caused a net loss for the first half as well, because I guess the portfolio contribution was less than was being modeled in when they previously calculated the fair value for it, or what would be depreciated off the depreciation effectively, or revaluation down, has exceeded the portfolio contributions from it. But yeah, the more worrying one is probably Voisey's Bay, which is the cobalt mine in Canada, operated by Vale Resources, I think the full names. But yeah, they saw a very dramatic fall. Not only did volumes decrease by half, they also had the average cobalt prices fell from $37.61 per pound in the first half of 2022 down to just $16.54 dollars per pound in the first half of 2023. So yeah, it's a more than 50% fall in the price, and then a 50% fall in the volume. So you ended up with, around about less than a quarter of the portfolio contribution compared to the prior year. So now the reduction in volume is because they're transitioning from open pit to underground mining, and I guess they were supposed to kind of match up. So as the open pit mining was getting depleted, the underground mining would ramp up, and they'd just balance each other out, and then one would replace the other. But it seems like it's taken a bit longer than expected to get the underground mining to full production, and so it's not quite offsetting the reduction in the open pit mining. And this is why the volumes have decreased, and they're expecting them to come back up next year. But with cobalt prices now being lower as well, the best you could expect from that, even if they double production again, would be sort of 6 million for half a year, and I guess 12 million or something for the full year. And my slight concern here is that I think the overall portfolio contribution from this half, from everything excluding Kestrel, which is obviously a runoff asset at the moment, was only something like 11 or 12 million. So let's say you add another 3 to that or something. Let's say it's sort of 14, 15. There were a few other things that got running below a bit as well, the prior things. Let's say you end up with something like 14, 15, so 30 million a year. But again, quite a big chunk of that is coming from close to half of that is going to be coming from Voisey's Bay potentially. We've got like a couple of years wait before we're probably looking at sort of end of 2025, beginning of 2026, before some of the larger assets in the portfolio, the new copper and nickel projects and so on, West Musgrave, Santo Domingo and so on, start coming into production. So start producing. So while we're waiting for the revenues from those to come in, are we going to be able to, if Voisey's Bay doesn't deliver enough, are we going to be able to cover things like the revolving credit facility, which they've been ramping up quite a bit to acquire new royalties, which has been really good to get these to growth pipeline. But I just concerned there might be some difficulty in the short term, just in the next couple of years, with financing there. Because if suddenly you see a pretty big drop, say Voisey's Bay, they have some problems with getting their underground mining up and running next year, and it ends up coming in 2025. What does that do for the covenants, the debt covenants on their revolving credit facility? What does it do? Does that mean they're in breach of those covenants? Are they not? They're going to be able to roll over? These are kind of questions I do have at this point. And I'm going to I will ask. I have already asked that question for their upcoming investor call next week, which is again on investormeetcompany.com or .org maybe. But anyway, yeah, I've preloaded a question on there about that, so we'll find out if we get an answer for that. Otherwise, I might bring it up with management more directly. Yeah, I will be interested to see what they think. I'm very positive on the company in the medium to long term. I think they've got a really good pipeline things going up, but I am just slightly concerned about the next couple of years, whether there is going to be any kind of cash shortfall. They've still got a couple of pretty big payments they've got to make on deferred consideration for the West Musgrave acquisition, which is quite a bit. I think it's like $20 million expected in the second half of this year, when we're not getting any money coming in from Kestrel. Probably not much from Voisey's Bay either. And I think they're only expecting 5 deliveries or something of cobalt in the second half, which is quite a bit lower than last year. So yeah, there is that slight concern there and if because then they're gonna have to definitely draw down on their facility to cover the cash requirements for the second half of the year, and there's maybe some uncertainty as to whether then cash coming in. And they're just thinking that because some positives are that one of the major that they obviously did quite a good acquisition recently with the $20 million for the Casitas, I think they pronounce it, in mining project in Chile, which is going to be a really massive one, and it's I think 2027 start for that one or something. So that seemed to be a really great deal. Copper mine, 20 million. If things get delayed a little bit, then their stake there, and it looks like it's going to be one of the biggest copper projects in the world, basically, and they're getting a 0.25% royalty, which could go up above 0.5% if there's any kind of delays, or they receive quite substantial payments in cash that would probably end up being close to what they originally invested anyway. So it seems to be a really good deal they've done there. Good operation and everything. But the other big one that we know about that they have as an option is POE from Brazilian nickel, and they already have a stake in that, but there's the potential for them to add an extra $70 million. But the good point here is that if they were to do that, that only is going to happen when they actually start production. So at that point, it would be a producing mine, so you wouldn't have to worry. It would then be giving you cash return straight away, which will cover any interest on the debt that they had to take to actually pay for it in the first place. So that one should be all right. But yeah, if they start doing other longer term, like mid-term acquisitions at this point with their current with their existing credit facilities before, with the sort of the uncertainty for the next couple of years, I'm starting to question whether that's a good move at this point, but beyond the POE, which seems like a good one. So yeah, we'll see how it goes, but I definitely want to have them talk a bit about that, because I am slightly concerned about the next year or two. But anyway, yeah, just a couple of things like the adjusted earnings for the first half of 2023 were $23.4 million, and the free cash flow was $17.5 million. Yeah, so I think that wraps up Ecora Resources. Let's move on to Aviva. So, yeah, some pretty big news for Aviva. They announced the appointment of Jason Storer as CEO of UK and Ireland General Insurance, replacing Adam Winslow, who is leaving for an external opportunity. I understand, or I heard in some article, I think he might be going to Direct Line, the car insurer. I don't know on that front exactly, but on Jason that we do know about, so Jason is currently the CEO of Aviva Canada, and this has been a real shining star of Aviva's general insurance business, and it's grown to be, in the 4 years that he's been running it, it's grown to be the number 2 general insurer in Canada, and it has the lowest combined operating ratio across the group, sort of like 92%, I think, significantly below the levels of the UK. So yeah, hopefully you can bring some of that sort of cost efficiency across to the UK. And yeah, he's going to be replaced in his CEO role in Canada by Tracy Garrad, who was previously CEO of AXA's UK healthcare business. So yeah, I'll see how she gets on. But yeah, quite good to see Jason coming over to the UK, actually, being the larger business. So if he can improve the profitability of that business, still profitable, but profitability, that would be great to see. So I'm pretty happy with that overall. And then yeah, finally I wanted to mention about Warner Bros. Discovery. So they put out some updated guidance for adjusted EBITDA and free cash flow, in line with the new assumption that the WGA and SAG-AFTRA strikes will continue through the end of 2023. So that's the Writers Guild and the Actors Guild, basically. So yeah, they'd previously said they were going to end in September, but obviously we're into September now, and they're now going, okay, let's just model for them not ending by the end of the year, and then see what that does to things. So things could change if they do end sooner, but on the basis that they do persist through the end of 2023, they're now expecting adjusted EBITDA to be in the range of $10.5 to $11 billion, which is around about $300 to $500 million less than they were previously guiding for. So 11 to 11.5, I think, was what they previously guided for. But we're seeing the opposite effect with free cash flow, where because of the reduced cash expenses now, we're seeing an increased 1.7. With the increased guidance for Q3 of $1.7 billion, $1.7 billion, and for the full year, I think it's something like significantly above $5 billion. So yeah, really quite positive, and obviously a higher percentage of the EBITDA there. So than they were previously expecting. It's going to be probably closer to 50% rather than 40% or something. And I think the reason they move in different directions is the free cash flows. With cash flows, obviously, it's they're not incurring the expenses, cash expenses, outgoings now for all the salaries and what have you, and for the different people working on these films and television productions that are now halted. But with things like adjusted EBITDA and stuff like that, a lot of that stuff would have been capitalized, so it wouldn't have been recognized as expenses anyway. So they just only really see the drop in potential profits as they've had to move movies. They've had to move the release of several movies back, like June Part 2, which is pretty devastating. And then a few things early next year have been pushed back as well. We don't know about Aquaman yet, but yeah, actually we've got, but that's why they're different anyway. But yeah, with yeah, one other thing to sort of mention, I did listen to so David Zaslav, the CEO of Warner Bros. Discovery, attended a conference, I guess you'd call it, hosted by Goldman Sachs. I think it was Communicopia or something like that. It was a really good, probably one of the best talks I've heard from him, actually. It wasn't just a talk, it was like a Q&A. But I think his answers, he was really on form, and he gave some really good color around things, talking about the impacts of the strikes and what have you. Just his vision for a lot of things. It was good, and they're talking quite a bit about putting live news, which is into Max. So CNN Max is going to be integrated in, so there'll be 24-hour live news actually built into the app, which is going to be interesting. He talked a lot about, there was lots of good stuff, and I think there's another one coming out this week from with the CFO who will be attending another such event, I think on the 14th. So I will I'll probably put a few comments from those in next week's, and probably a little bit from this week's one as well that I mentioned. I think it was on the 6th of September, the David Zaslav one. But yeah, that was very interesting just to see, and he talked a bit about these figures and so on as well. It was very interesting to see the just their vision for things and how things have changed, how the business and his vision for how things are going to move in the future. We've also got this week, this weekend, as we were having the Nun 2 released, which is one of the sort of Conjuring universe films, which have historically done very well. I wasn't a particularly big fan of the first Nun film, but it did commercially well, and I think from what I've seen of the trailers, this one looks good. I'm actually going to see it this afternoon, so I will let you know next week if it's any good. But yeah, and we can have a look at the figures, so that'll be potentially some good news next week. We'll just see how we get on. But yeah, I think that is pretty much everything for now. Yeah, so stop sharing my screen. Yeah, I will catch you all next week for another update.